Good evening. Welcome to AS12. What is Accounting Standard 12? Accounting Standard 12 is accounting for government grant. So this is a very simple and small topic. Accounting for government grant. That means if a company receives any kind of government grant, how are we going to do the accounting of that? Because normally in a transaction you pay and you receive something, whereas in case of a government grant, government is only giving you are not giving anything back to the government. So how are you going to record this transaction? That is the issue. Should the government grant be recognized in P&L account? Should the government grant be recognized in capital reserve? Should the grant received be recognized in deferred income? Should it be credited to asset account? These are the questions which are coming to my mind, that how this grant will be accounted for. This standard will give you the guidance now, because the treatment will depend on the type of grant. So we have to understand the type of grant, and accordingly the treatment can be either P&L account or deferred income or capital reserve, or you will credit to the asset account. That will depend. Okay. So now we'll come to the main part of the standard. Do you know any other name for the government grant? Do you know any other name for the grant which you come across every day in the newspaper, news channel? So other name for government grant can be subsidy or incentive. So whatever name they will mention in the problem doesn't matter. A government grant can be known by other names also. So it is basically a kind of help given by the government. In our cases, in this chapter, the government is providing the help to a business enterprise, not to the consumers. So you may get a direct bank transfer if you are a poor man. That is also a form of subsidy, but that is not AS12, because he is a poor chap, he is receiving 500 rupees in his bank account. Or government may give you subsidy in kerosene, diesel, or gas cylinder, or something like that. That is not subsidy. Here we are talking about such benefit which are given to a business enterprise, and how that business enterprise is going to account for it. Okay, ready for this wonderful chapter? So this statement deals with accounting for government grant. So how will you do the accounting of government grant? We are going to discuss accounting treatment when you receive it, and accounting treatment when for some reason you may have to refund it. Government grant can be known by other names also, doesn't matter. Government grant can be known by names like subsidy or cash incentive or duty drawback. Duty drawback means when the government collects duty from the companies, these duties are refunded. It is called duty drawbacks. So normally when you are an exporter and an importer company, when you import, they will charge you duty. When you will export, they will refund the duty, and that is called duty drawback. Anyway, that does not make any difference. Next, second point, what is government? Amazing question. What is government? So the answer is also interesting. Government refers to government. Government means government. Wow. Institute also could not define government. So it says government refers to government, but government can also refer to government agencies also. So there are many government agencies which are involved in providing subsidies. Okay, like nowadays for wind energy, solar energy, there are agencies of the government which give you subsidy if you install wind power, solar power, etc. So even the subsidy received from any agency of the government is also covered by the standard, and similar bodies. And similar bodies means it can be, for example, Bill Gates Foundation also. So even subsidy received, grant received, incentive received for from Bill Gates Foundation for healthcare promotion, for vaccination program, then that is also covered by this standard. And these similar bodies can be local, national, or even international bodies. In example of international body, UNO, United Nations Organization, nowadays very popular, WHO, World Health Organization. So even if they provide you some kind of subsidy or incentive, that is also covered by this standard. Okay, so these are some basic paragraph. Then government grants are assistance by the government. Third paragraph is what is government grant? What is a government grant? If suppose I sell this pen to the government for 200 rupees and government gives me 200 rupees. Reply, I sold this pen to government for 200 rupees and I got 200 rupees from the government. Was it a government grant? The answer is no. It is a normal trading transaction. But government grant means assistance by the government, some kind of incentive, help, assistance given by the government either in cash, that is cash transfer, or in kind, means asset. For example, government may give land, government may give license, government may give plant and equipment to an enterprise for past or future compliance. For past and future compliance, past compliance means the compliance have already been met. Government says you vaccinate 1 crore people, you vaccinate 1 crore people, and then we will give you grant. So you have done vaccination of 1 crore people, government has the record that yes you have done, then the grant will be given. That is past compliance. Or future compliance. Future compliance means government will give you grant first, and out of this money you have to incur the expenditure. So then you will incur 1 crore vaccination program. Past compliance means you have fulfilled the condition, then you receive the grant. Future compliance means you have received the grant first and that money will be incurred for those conditions given in the grant with certain conditions. Okay, with certain conditions. Grants does not come without any reason. Government does not give you grant without any reason. Otherwise, I will go and stand outside the government gate and I will collect all the grant. But then the government will put conditions on them, strict conditions on them. They will appoint inspectors to check whether those conditions are fulfilled. There will be audits done and then the grant is released. Therefore, it is not without condition. Lot of conditions have to be fulfilled. Next question is what is not government grant? Important. what will not come under the definition of government grant. So the standard says the following items are excluded from the list of government assistance. That means for the following items, this standard is not applicable because they are not government grant. So what is the first item? The first item is which cannot reasonably have a value placed upon it. Okay, which cannot have a reasonably have a value placed upon it. So its monetary value cannot be calculated. Its monetary value cannot be calculated. Okay, so if the government has constructed road, port, airport, the businessman will benefit from it. The businessman will benefit from it. Okay, but can you find out the monetary value of this? The answer is no. So if the government is constructing road, port, power station, okay, you may be benefiting from it, but this cannot be accounted under this standard because you cannot calculate the monetary value of it. Okay. Example number 2, what cannot be treated as government grant? In your book, it is written in point number 3, those transactions with government which cannot be distinguished from the normal trading transaction of the enterprise. So if you are dealing with the government as a normal trader, you pay for goods and service, government gives you goods and service. Or you provide goods and service to the government and government pays to you at the market price. So the normal commercial transaction which are at market prices are not government grant. So I sold 1,000 books to the government and I got the normal market price. It was a normal trading transaction. Some company may supply uniform to the army at the market price. Government makes payment to them. This is a normal trading transaction. Some companies supply food to government canteens at normal market price. That is not a government grant. So every transaction with government will not become a government grant. Okay, student who are interested can write this point here in point number 3. Example, sale of goods to government. Sale of goods to government. Sale of goods to government at normal price. At normal market price. Sale of goods to government at normal market price is not to be covered under this standard. That will be covered by your normal other standard. Now paragraph number 4, 2 approaches followed for accounting treatment of government grant. As per AS 12, there are 2 approaches. Sir, what are these 2 approaches? One is called capital approach and one is called income approach. AS 12 allows both approaches. AS 12 allows 2 approaches, but it depends on what kind of grant is that. It depends on what kind of grant is that. Capital approach means it directly goes to shareholder fund. I will tell you in the next slide. It directly goes to the shareholder fund. Under this approach, a grant is treated as a shareholder fund, means it is not routed through P&L account. It is directly transferred to capital reserve and it becomes part of shareholder fund, but it is not routed through P&L account. It is treated as if it is a capital receipt. Treated as a capital receipt. it is treated as a capital receipt. Okay, this is one approach. The other approach is called income approach, where the grant is taken to income over one or more period. So it is routed through P&L account. It is routed through profit and loss account. Here the grant is treated as a revenue receipt. So both options or both approaches are allowed. However, it will depend on the nature of grant. It will depend on nature of grant. And as we will go ahead in the next few paragraph, you will understand when I am going to apply capital approach and when I am going to apply the income approach. Next, paragraph number 5, recognition of grant. Paragraph number 5, recognition of grant. So I am going to ask you a question and I will see what will you reply. Should grant be recognized? Pay attention. Should grant be recognized on option A? Student will quickly reply cash basis or accrual basis. That means should I recognize grant only after I have received it, or we can also recognize on accrual basis. That means we can pass the entry grant receivable account debit. So let me check from the student, what do you think? Should grant be recognized on cash basis or accrual basis? Anybody wants to answer? Grant should be recognized on cash basis. Quickly reply. Or accrual basis. So I am getting the answer from the student that cash basis. Cash basis, most of the students are saying cash basis. The answer is grant can be recognized on accrual basis, subject to certain condition. Okay, subject to certain condition, we can recognize the grant on accrual basis. So therefore, the student should know in accountancy, accrual is a fundamental accounting assumption, and that applies here also. Okay, so government grant should not be recognized until there is a reasonable assurance, underline the word reasonable assurance, that the enterprise will comply with the condition attached to them and the grant will be received. Read it again. Theory question, but interesting question. Should grant be recognized on cash basis? You should say grant can be recognized on accrual basis if there is a reasonable assurance. That means if there is a reasonable certainty. Reasonable certainty. Okay. That means more than 50% you are certain. Reasonable certainty means more than 50% probability. You are more than 50% confident that the enterprise will comply with the conditions attached to them. As already discussed, grants come with conditions. So first thing is that you must be reasonably certain that you will be able to comply with the conditions. Government will put some condition. Government will say you will provide education to 1000 student. You will distribute medicine to 5000 people. So you are reasonably certain that yes, I will be able to fulfill those conditions. And second, you must be, and means both conditions, and you must be reasonably sure that grant will be received, because you are dealing with government. And when you are dealing with the government, Many times the government may not sanction or may not give you the grant, even though you may have fulfilled the condition. It is government. So suppose you are an entity, okay, entity is close to party in power. I will not write any particular name. This entity is close to the party in power. So in that case, there is a reasonable assurance that the grant will be received. But if the entity is opposite of party in power, opposition party, you are an entity who does not favor the party in power at the center. Oh my God, possibly the government will not give you the grant because the government knows this person is not in our favor. Is it right? So if you are, suppose, Mulayam Singh party's candidate running a business, government is not going to give you the grant. Okay. But if you are Yogi Adityanath's candidate, then there is 100% assurance grant will be received. So it depends, right? So that is why our standard setters have also thought about it, that there may be a possibility that you may comply with the condition, but government may not release the grant. So when both conditions are satisfied, you will recognize on accrual basis. But if these conditions are not satisfied, if these conditions not satisfied, then what you do? Then wait and receive the grant. Then cash basis. If these conditions can't be fulfilled, then cash basis. But if you are willing to or able to fulfill this condition, then accrual basis. Now we'll begin with accounting. Okay, these first 5 paragraphs are only theoretical in nature, but exam questions will be based on paragraph number 6 and onwards. 6 and onwards. So first we will deal with government grant relating to specific fixed asset. Government grant relating to specific fixed asset. For example, government grant may relate to a particular plant and machinery. Government says you install this solar plant and we will give you 15% of the cost as subsidiary. Okay. So here it is related to a specific plant. Government says you put up a windmill and we will give you 10% of the cost as grant or any such item. Okay. So if it is related to any specific item of fixed asset, if it is related to specific item of fixed asset, it has to be specific. It can be an equipment, okay, it can be a machine, it can be building, it can be a windmill, a solar power generator, or whatever is that. Then what is the treatment? Now here the standard says if it is related to specific fixed asset, then standard gives me two options to do the accounting. Two alternative methods of accounting are allowed to you. So whichever method you want to choose, you can choose that. Listen to me carefully. First option is the grant should be presented in the balance sheet by showing the grant as a deduction from gross value of the asset concerned in arriving at their book value. So the first treatment is when you receive the grant, suppose you receive the grant, bank account debit to respective PPE account. bank account debit to respective PPE account. That means your PPE account balance will reduce, being grant received. Your PP balance will reduce. And then what will happen? When your PP balance will reduce, depreciation charge will also reduce. Depreciation charge will also reduce. Where the grant related to specific fixed asset equals the whole or virtually the whole of the cost of the asset should be shown in the balance sheet at nominal value. So first point was credit to fixed asset account, fixed asset value will reduce. Second point says, which is normally not possible but it is mentioned in the standard, suppose the cost of the asset is 100 rupees and grant received is also 100 rupees. So now what will be the problem? If I pass this entry, the balance in the PP account will become 0. So then they are saying don't make it 0, keep some balance, some nominal balance in the PPE account. So in this case, I will pass the entry like this. In this paragraph, I will receive a grant 100 rupees, bank 100. To PPE, what I'll do, I will credit 99 only and remaining 1 rupee, I will credit to P&L account. Remaining 1 rupee, I will credit to P&L account. So this will keep a balance of 1 rupee in the PPE account. At least the asset will appear in the balance sheet and you will give the necessary disclosure. Asset will appear in the balance sheet. Is it right? So this is the meaning of this line. Now understand, focus on the first part because last 2-3 exam questions were based on this. Bank to PP, this will reduce the carrying amount of PP and depreciation charge will also be reduced prospectively. Depreciation charge will also be reduced prospectively. Next is option number 2. There is a second option also. When you receive the grant related to a depreciable fixed asset, may be treated as deferred income. So first you underline the word depreciable fixed asset. Depreciable fixed asset means an asset which is depreciated, building, machinery, plant. Land is not a depreciable asset. So option number 2 is you will credit the grant received to deferred income, treat it as a deferred income, income of the future period, deferred income, okay, being grant received. And then what will you do? You will transfer from deferred income to P&L account. You will transfer from deferred income to P&L account in the ratio of depreciation. So every year, some amount you will transfer from deferred income debit to P&L account. This entry will be passed over the useful life of the asset in the ratio of depreciation. In the ratio of depreciation. So if you are following straight line method of depreciation, even the grant will be transferred equally over the life of the asset. If you are following WDV method, then even the grant will be transferred to P&L account in WDV ratio. So the idea is that as you will credit the grant to P&L account, you are also debiting the respective depreciation account. So the net effect is taken care of. So whether you follow option 1 or option 2, whether you follow option 1 or option 2, the net effect in P&L account will remain the same. Okay. So now I am going to dictate one question to you. So please write down this question. Please write down the question. Everybody, take out a pen, pencil, notebook. This question is, you can see, from January 2021 exam for 5 marks compulsory. And this question is exactly based on this discussion which we had just now. Ready? Question in the notebook. Write down Darshan Limited. Darshan Limited purchased a machinery. Darshan Limited purchased a machinery on 1st April 2016. On 1st April 2016 for rupees 130 lakhs. For rupees 130 lakhs, in bracket useful life 4 years. Useful life 4 years. Write down little fast. Question from January exam. 5 marks. Government grant received is 40 lakhs. Government grant received is 40 lakhs for the purchase of the above machinery. Government grant received is 40 lakh for the purchase of above machinery. Salvage value. Salvage value at the end of the useful life. Salvage value at the end of useful life is estimated at rupees 60 lakh. Is estimated at rupees 60 lakh. Darshan Limited decides to treat the grant as deferred income. Darshan Limited Darshan Limited decides to treat the grant as deferred income. You are required to calculate you are required to calculate the amount of depreciation. You are required to calculate the amount of depreciation and grant to be recognized in profit and loss account for the year ending 31st March 2017. For the year ending 31st March 2017, 31st March 2018, 31st March 2019, and 31st March 2020. 2020. Last is 2020. All of you enjoy 2020 matches, right? Darshan Limited follows straight line method for charging depreciation. Darshan Limited follows SLM. You can write SLM for charging depreciation. This question is from January 2021 exam, 5 marks. October 2021 MTP, October 2021 model test paper of the institute, 5 marks. And this is a very easy question. First of all, let us see what accounting policy company wants to follow. So company wants to follow the accounting policy of treating the grant as deferred income. So this grant 40 lakh is related to a specific item of fixed asset which is machinery. This 40 lakh will be deferred. This 40 lakh will be deferred. So first they are not going to transfer to P&L account. Bank account debit to deferred income 40 lakh. Bank to deferred income 40 lakh. And then what they are going to do? They are going to transfer to P&L account in the ratio of depreciation. But one good thing about this question is that the method of depreciation is straight line and the useful life is 4 years. So every year, that is year 1 to year 4, they are going to transfer 1 by 4 of 40 lakh to P&L account. So deferred income account debit to P&L account, 40 divided by 4, that is 10 lakh, 10 lakh. And this entry they will repeat for 4 years. And the question has also asked you, calculate the amount of depreciation. So depreciation formula is cost minus residual value divided by number of years. So 130 minus residual value 60 divided by 4. So annual depreciation would be, check the calculation, 17.5 lakhs. 17.5 lakhs. For this much effort, can you believe they are willing to give you 5 marks? But the question is that you have to know this in advance and you must know how to present the answer. Okay? So depreciation will be as usual. While calculating depreciation, do not deduct deferred income. Do not deduct government grant because they have decided to treat the government grant as a deferred income. So they are not going to adjust the asset account. Okay. So very good, Surya. Let us write down the answer nicely. So write down nicely in the notebook in good handwriting because this question is from exam as well as October 2021 MTP. As per AS12, Sanket is right. As per AS12, grant related to depreciable asset. Grant related to depreciable asset. If treated as deferred income, write down in notebook. If treated as deferred income, are recognized in profit and loss statement are recognized in profit and loss statement on a systematic and rational basis over the useful life of the asset. Over the useful life of the asset. Over the useful life of the asset. Then write down amount of depreciation and grant to be recognized in the profit and loss account each year. So now I am going to give you the answer, which is very easy. The question is how much depreciation and how much grant you will recognize in P&L account. So the heading is amount of depreciation and grant to be recognized. First write down depreciation per year. First is depreciation per year. You can change the presentation if you want, that is your choice. Answer must be same. So write down right hand side rupees in lakhs. Right hand side rupees in lakhs. First write down cost of the asset. Cost of the asset 130. If salvage value is given in the problem, deduct it. Less salvage value 60. Less salvage value 60. So balance is 70. This is called depreciable amount. Depreciable amount means cost minus salvage value, and then write down depreciation per year. depreciation per year will be 70 lakh divided by 4 years. 70 lakh divided by 4 years, as you correctly said, 17.50 lakhs. Okay, so this is about depreciation. 2.5 marks for this much effort. And then what about the government grant to be recognized in P&L account? Write a note. First, write a note. Write the answer according to the question. Rupees 17.5 lakhs. Rupees 17.5 lakh depreciation will be recognized for the year ending 31st March, for the year ending 31st March 2017, 31st March 2018, 31st March 2019, and 31st March 2020. Depreciation will not be affected. Can you see that? Because you have not credited the grant to PPE. Now, next line, write down amount of grant. Your next question was how much grant will be recognized in P&L account each year. So please write amount of grant recognized in P&L account each year. Because we are following straight line method, even the grant will be recognized on straight line basis, means equally. So the answer is 40 lakh divided by 4 years equal to rupees 10 lakh, for the year ending 31st March 2017, 31st March 2018, 31st March 2019, and 31st March 2020. Okay, I hope you enjoyed 2020. According to question, we have designed the answer. Question was how much depreciation will be charged each year? 17.5 lakh. How much grant will be recognized each year? That is 10 lakh per annum. This answer is over. One more question we will try. Question number 2C. This question is there in your book. 2C. After some 2 or 3 pages, question answers will begin. So you will come to question number 2C after 2 pages. This is the question. Explain the treatment of the following. Rupees 50 lakh received from the state government. Rupees 50 lakhs received from the state government for setting up of a water treatment plant. For setting up of a water treatment plant, the question is what accounting treatment will you follow? Water treatment plant is a specific fixed asset and it is a depreciable fixed asset. So what answer will be written, that there are two options. Option 1 is credit the grant to asset account. Credit the grant to asset account. This will reduce the carrying amount. This will reduce the carrying amount of the asset. This will reduce the carrying amount of the asset. Depreciation will be charged on reduced carrying amount. Depreciation will be charged on reduced carrying amount. And option 2 is Option 2 is credit the grant to deferred income. Credit the grant to deferred income and recognize it in P&L account in the ratio of depreciation, and recognize it in P&L account in the ratio of depreciation. Okay, so this answer is already printed in the book, but still if you want to write down, you can write down it quickly. If they ask you a direct question, then accordingly you will write. Done. Now we'll take one question number 6 in your book. After 2 pages again, you will find question number 6. Question number 6 from RTP. A fixed asset was purchased for rupees 10 lakh. A fixed asset was purchased for rupees 10 lakh. Government grant received towards it amounted to rupees 4 lakh. Question number 6. You will find in your book. Government grant 4 lakh. Show the treatment. Show the treatment if it is a depreciable asset with rupees 2 lakh residual value. Residual value 2 lakh and 4 years useful life. Company adopts SLM of providing depreciation. Now this time the question has not given. What has not been given? Whether the company follows option 1 or whether the company follows option 2. That is not clear from the question. So what the student will do in such cases? The student will write both the answer. The student will write both the answer. He will say company can either credit the grant received to the asset account, depreciation charge will reduce, or the student can write alternatively company can treat the grant as deferred income and recognize it in P&L account in the ratio of depreciation. So I think the answer is printed. Please check whether the answer is printed or not. Please check whether the answer is printed so that I will not have to dictate the answer. Is it printed? Say yes quickly. If not, then I will dictate. Come on, yes, check. So first method is credit the grant to fixed asset. If the institute asks you to pass journal entry, then the journal entry would be bank account debit 4 lakh, bank account debit 4 lakh to fixed asset account 4 lakh. What was your cost of the asset? 10 lakh. Suppose this is my fixed asset account. This fixed asset was purchased for 10 lakh and by bank grant received 4 lakh. So by depreciation will be out of 10 lakh 4 lakh we have already reduced. So 10 minus 4 and residual value is also given. Residual value is minus 2 and the useful life is given. How much was the useful life? 4. So the depreciation charge will be, yes Tanya, please tell me the depreciation. 10 minus 4. 10 minus this 4 is grant. So my carrying amount reduces by 4 lakh. So it becomes 6 lakh. 6 lakh minus residual value 2 lakh divided by 4. So 6 minus 2 is 4. 4 by 4, 1 lakh. So depreciation will be 1 lakh. And by balance carried down, will be 10 minus 4 minus 1, that is 5. Buy balance carried down 5 lakh. This way, the company is going to prepare the asset account in the first year. Everybody agrees? Depreciation 1 lakh, Gorana 1 lakh, Sanket is 1 lakh, Tanya is 1 lakh. Carrying amount after year 1 will be 5 lakh, and then every year we are going to provide a depreciation of 1 lakh. So this is how the fixed asset ledger would appear in year 1. Year 2, 3, 4, two balance brought down, buy depreciation 1 lakh, buy balance carried down. We'll repeat, okay, for year 2, 3 and 4. Method 2 in your book, method 2 is credit the grant as deferred income. Credit the grant as deferred income. So the entry would be bank account debit 4 lakh to deferred government grant 4 lakh. To deferred government grant 4 lakh. So this time I will have two ledgers. One will be that PPE account. The PPE account will be two bank account, purchase 10 lakh, and buy depreciation will be 10 lakh minus 2 lakh divided by 4. So that is 8 by 4, 2 lakh depreciation. And deferred income account would look like this. Buy bank account 4 lakh, and I will transfer every year 1 lakh rupees to P&L account. 4 lakh divided by 4 years, straight line, and two balance carried down 3 lakh. So that is what is written. The book value of the asset is 10 lakh, residual value is 2 lakh, useful life is 4 year. So under method 2, depreciation will be 2 lakh rupees. Okay. And buy balance carried down will be 8 lakh. And under method 2, deferred income account will be created, and you will transfer 1 lakh rupees to P&L account. So what is the net effect in P&L account? Under method 2, depreciation 2 lakh debit side, government grant income 1 lakh credit side. 2 lakh debit side, 1 lakh credit side, net effect is 1 lakh. Under method 1 also, on the screen method 1, I am going previous slide. Method 1, depreciation charge below is 1 lakh. So the net effect in P&L account is 1 lakh rupees. Whether you follow method 1 or method 2. But these two options are allowed to the companies under this standard. The grant will be recognized in P&L account over the life of the asset in the ratio of depreciation. Depreciation charge is 2 lakh per annum. Grant will be credited to P&L account rupees 1 lakh per annum. The entry follows, the entry every year will be as follows. So every year you are going to pass an entry, deferred government grant account debit to P&L account. This entry you will repeat 4 times, and this account will close. This deferred government account will close after 4 years. So this was my grant related to specific fixed asset, which is a depreciable fixed asset. Come back to your theory paragraph. Theory paragraph number 6, first page of this chapter. First page of this chapter, paragraph number 6. Under that there is a third sub paragraph, grant related to non depreciable asset. Example is land, because land is a non depreciable asset. So in case if you receive grant related to a non depreciable asset, for example land, write down there, then what you will do? Then first point, it will be credited to capital reserve. It will be credited to capital reserve. But second point, if it requires the fulfillment of certain obligation, if it requires fulfillment of certain obligation, that means you have to complete some obligation, some terms and condition, like you may have to construct a building, only then you are allowed, or if the land is an agricultural land, but you have to grow only a certain type of crop, that is a condition. Government may give you grant related to land, you can use that money to buy land, but then that land has to be used to grow only a particular crop, particular herb, particular plant, particular flower, then it is a conditional grant. If the grant is a conditional grant here, then the grant should be credited to income over the same period over which the cost of meeting such obligation is charged to income. Then in that case, you will defer the grant. If it is a conditional grant, then you will defer it and recognize it over the number of years over which those conditions will be fulfilled. Cost of meeting such obligation is charged to income. Okay. And the third one, the third point to be remembered is, if you have deferred the grant, if you have deferred the grant, then in that case, it will be separately disclosed in the balance sheet. Deferred income will be shown separately in the balance sheet, either as current liability or non-current liability. Deferred grant will be shown separately either as current liability or non-current liability, depending upon in how many years you have to satisfy the condition. Depends upon the years of satisfaction of condition. So deferred grant till it is fully transferred to P&L account will appear in balance sheet either as current or non-current liability, depending upon whether you have to complete the conditions in 1 year or more than 1 year, and accordingly you will classify it as current or non-current liability. Okay, it is a liability because you might have to refund it. Sometimes the student asks me the question why it is a liability, because you are supposed to, you are obliged to fulfill some condition, and if you don't fulfill the conditions, you might have to refund it. So now we'll come to question number 2A. After 2 or 3 pages, you will find question number 2A, tick mark whatever I am doing. Remaining questions the student will complete as homework. Whatever maximum I can take, I will take, keeping the time constraint in mind. Question number 2A, explain the treatment of the following. A firm acquired a fixed asset for 250 lakh on which the government grant received was 40%. So 40% of 250 lakh is 100 lakhs. Okay. What is the treatment? This question has a small area of doubt. This question has a small area of doubt. It says fixed asset. It has not mentioned. It has not mentioned whether it is a depreciable fixed asset or non-depreciable fixed asset. So I have written an answer in your book. First you read the answer from your book. Point number A. This part of the answer is assuming that it is a depreciable fixed asset. So I will read the answer from your book. Keep the book in front of you. No need to write. it is assumed that fixed asset is a depreciable asset. So if you assume it is a depreciable asset, the government grant in the form of cash related to fixed asset which is depreciable asset, following treatments can be given. Option 1, grant of 100 lakh should be shown as deduction. So if you think it is a depreciable asset, question is not clear on that, then we have two options. Option A, credit fixed asset rupees 100 lakh, and option B is defer income 100 lakh. It is written in the book also, and recognize in P&L account in the ratio of depreciation. In the ratio of depreciation. This is printed in the book. What the student should write? Assumption B. What is the assumption B? For the same question, you can write the assumption B that the grant relates to, please write down now in the notebook, question number 2A. This question does not state clearly whether it is a depreciable or a non-depreciable asset. So how the student will get the full marks? First, assumption A is depreciable fixed asset. Second, assumption B, the grant relates to, now you can write in the notebook, grant relates to non-depreciable fixed asset. Grant relates to non-depreciable fixed asset like land. So here we will write if all conditions have been fulfilled, credit grant received to capital reserve. To capital reserve. If all conditions have been fulfilled, credit grant received to capital reserve. If the conditions are required to be fulfilled, if the conditions are required to be fulfilled, then defer the grant and recognize in P&L account over the period recognize in P&L account over the period over which the cost of meeting such obligations is charged to P&L account. So this is the complete answer. This will tell the institute that you are a very good student, because if it is a depreciable fixed asset, we will write the answer in a different manner. If it is a non-depreciable fixed asset, then our treatment can be different. Again, there it depends whether conditions have been fulfilled or not fulfilled. Okay. So once you have completed writing, tell me, and then I will go to the next discussion. So this question covers both depreciable and non-depreciable asset. Okay, so can we move to the next now? Next paragraph number 7. Grant related to revenue. Grant related to revenue. That means grant is of revenue nature, not related to asset. For example, providing medical facility, providing education, providing vaccination, providing job, okay. So, which are revenue nature, day to day expenses relation, not related to fixed asset, not related to fixed asset. So, government has lot of scheme. You give vaccination to 1,000 people, we will give you subsidy. You provide food grain, we will give you subsidy. You provide books to students, will give you subsidy. How to give treatment of such grant which are related to revenue in nature, not related to fixed asset or plant, okay, or any investment in a capital project. So that is called grant related to revenue, education, health, okay. So the answer is should be recognized on a systematic basis in the penal account over the period necessary to match them with the related cost which they are intended to compensate. So first what you will do, when you receive this kind of grant, bank account debit to deferred income. Suppose you received 6 lakh rupees, and what you have to do, you have to transfer it to P&L account. How much? You have to transfer in the ratio of expenditure. You have to transfer to P&L account in the ratio of expenditure. So suppose you are expected to incur expenditure of 3 to 1 in the ratio of 3 to 2 is to 1. Government says we will give you 6 lakh rupees. You use it for education of a poor student. Government gave you 6 lakh rupees and you are expecting to incur this cost over 3 years in the ratio of 3 is to 2 is to 1. So what will you do? You will proportionately transfer to P&L account every year. For example, in year 1, the entry will be deferred income account debit 3 lakh to P&L account 3 lakh. But in year 2, the entry will be deferred income account debit 2 lakh to P&L account 2 lakh, 3 is to 2 is to 1. And in year 3, the entry will be deferred income account debit 1 lakh to P&L account 1 lakh. Wonderful. So this way, on one hand you have income, you have expenditure also. So income and expenditure will compensate each other in the P&L account. But how do you present in the P&L account? The standard has given you two methods of presentation. One method of presentation is this grant will be shown as other income in P&L account, and the other is you will show it as a deduction from the related expense. So I am going to discuss it in detail. Presentation. This is only about presentation in P&L account. Presentation of revenue grant in P&L account, there are two options. Option 1, treat it as other income. Option 2, deduct it from the expense. Now let us see, this is my P&L account and I am following option 1. How will this be presented? Under the heading income, I have one heading called other income. Under other income, I will write grant. In the first year, 3 lakh. And then I have expenses. Under expenses, I will have some other expenses. Under other expenses, I will write related to dash dash activity. Whatever that activity, say 3 lakh. So you will present separately. This is called option 1. What about option 2? Under option 2 in P&L account, you will directly write in expense, other expense, 3 lakh rupees expense, 3 lakh rupees income. Coincidentally, here the answer is 0. Otherwise, suppose expense was different amount, then some balance will come. So this is called net method and this is called gross method. In gross method, income is shown separately, expense is shown separately. In net method, only the net amount is presented in P&L account. This is called net approach. So student will have to check in the examination question whether the institute wants gross approach of presentation or net approach of presentation. If the question is silent, you have to write the assumption and accordingly present it in your answer sheet. Okay. So what good student will do, he will continuously note down all important things that teacher is explaining, because these things are not very clearly explained in your study material. Now we'll come to question number 2D. After 2 pages, question number 2D. Question number 2D. Come on. Question number 2D. Explain the treatment of the following. Rupees 25 lakh received from local authority for providing medical facilities to the employee. Is it related to an asset? Is it related to an asset? Say yes or no. It is not related to an asset. You just have to provide medical facilities to employee, and for that the local authority has given you 25 lakhs. So it is a grant in the nature of revenue. It is a grant in the nature of revenue. Now the question is, what is the treatment? So here I don't know whether this 25 lakh has been received after providing medical facility or before providing medical facility. So you will write down case 1, answer is given. If grant is received, after fulfilling conditions, you have suppose already spent the money, then you have got the grant, entire rupees 25 lakh credit to P&L account. That is one possibility, that you have already incurred the expenditure. Case 2, if the conditions are to be fulfilled in future, suppose the government has given you 15 lakh, 25 lakh and government says use this money and provide medical care to the employee, then first what I will do, defer the grant, and second then transfer to penal account, every year in the ratio of expenditure. The answer is written in your book properly. You can read from there also. Transfer to penal account every year in the ratio of expenditure. This question has not given us the ratio of expenditure, otherwise we would have applied that. Okay. So this is the treatment of grant in the nature of revenue. Next, paragraph number 8 in your book. Come to first page again. Underline these 4 words: grant in the nature of promoter's contribution. Paragraph 8, grant in the nature of promoter's contribution. Grant in the nature of promoter's contribution means it is given with respect to capital investment, okay, in a particular region. Government says, the scheme of the government is that you set up a plant in a backward area. You set up a factory in a backward area. You will say, why I will set up a factory in a backward area? Government says if you set up a factory in a backward area, then people will get employment, infrastructure will develop, growth will take place, standard of living of people of that area will improve. But then as a businessman, you will say, what is my interest in that? Why can't I locate my plant in a developed city where everything is available? Then the government says, don't worry, we will give you subsidy. So here the subsidy is in the nature of promoter's contribution, as if the government is investing in the capital of the company. So government says, we will pay you 25% of the project cost. Here it is not related to specific fixed asset. Here it is not revenue in nature also. So therefore it is not related to any specific fixed asset, not related to revenue. It is related to overall project cost. So when the grant is related to overall project cost, it is called grant in the nature of promoter's contribution, and they are also popularly called capital subsidy. So if you come across such term in the question, capital subsidy, grant in the nature of promoter's contribution, so here the treatment is different. Here the treatment is, since it is not related to revenue, listen to me, since it is not related to revenue and since it is not related to any specific fixed asset also, it is more like a capital contribution. It is more like a capital contribution, hence it should not be routed through P&L account. In the introduction only we have discussed, there are 2 types of grant. Grant in the nature of capital, grant in the nature of revenue. So this is a capital type grant, hence it will directly go to capital reserve. So the entry will be bank account debit to capital reserve, and in the balance sheet under the head reserve and surplus, this capital reserve will appear. So it won't go through P&L account. You can't transfer to P&L account and increase your profit, not allowed, because it is like a capital grant, capital receipt, and because it is transferred to capital reserve is not a free reserve. Another reason for transferring to capital reserve is, make it not free reserve. Make it not a free reserve, and since it won't be a free reserve, under Companies Act, you can't distribute it as dividend. So that is another logic they have developed. On one hand, government is giving you money for setting up of a plant, and if they allow you to treat it as revenue reserve, You will use that money for payment of dividend. Not allowed. You can't use capital reserve for payment of dividend. So entry will be bank account to cap reserve. Presentation will be in the balance sheet under the head reserve and surplus. It will become part of shareholders fund. It will become part of the net worth. It won't go through the P&L account. Okay. So one question number 2B, next page or after 2 pages, 2B, which has all the 4 type of scenarios. It says explain the treatment. Capital subsidy. When the question uses the term capital subsidy, underline, highlight, it means it is grant in the nature of promoter's contribution received from the central government for setting up a plant in a notified backward region. Why will government give you grant? Because you have to set up the plant in a backward region so that backward region can also prosper, develop. Cost of the plant is 300 lakh. Subsidy received is 100 lakh. So the answer will be bank account debit 100 lakh to capital reserve 100 lakh. So what you will do? You will transfer it to capital reserve because it is grant in the nature of promoter's contribution. Okay. One more question we will solve. Question number 4. Question number 4 was asked in RTP May 16, May 2005 exam. Okay. So this is also from exam. Question number 4 from your exam and RTPs. Next time in your exam, are you ready to solve this question number 4? Next page you will find it. A limited company has set up a business in a designated backward area. These are the hint. So mostly such phrases will tell you that this is grant in the nature of promoter's contribution, which entitles it to receive as per a public scheme announced by GOI, government of which country? Iraq, Iran, or India? GOI, government of Iraq, option B, Iran, or Ireland, or India. India. A subsidy of 15% of the cost of the investment. Now here the grant is not related to specific asset. Grant is related to overall investment in that backward area, having fulfilled all conditions laid down under the scheme. You have complied with the condition. Company on its investment of 100 lakh, so total investment is 100 lakh. Government says first you spend 100 lakh, then the government will give you a subsidy 15 lakh in January 2015. So 15% grant received. Grant is related to overall project size. Grant is not related to specific asset. Grant is not related to revenue. So what is such grant known as? Such grants are known as grant in the nature of promoter's contribution. So the treatment should have been bank account debit 15 lakhs to capital reserve. Write down nearby 15 lakh. This is the correct treatment as per the standard. Yes, 12. What the accountant is doing, the accountant would like to record the receipt as an item of revenue. Oh, so sad. Wrong treatment. And to reduce the losses on P&L account for the year ended 31st March 15. Accountant wants to transfer to P&L account. This is wrong. The intention of the accountant is that if I transfer it to P&L account, then my losses will either reduce or may get converted into profit. But the standard does not allow you to do that. So your answer will be accountant is wrong. The correct treatment is bank to capital reserve. Capital reserve will form part of shareholder fund. This cannot be routed through P&L account. It is not a grant in the nature of revenue. It is a grant in the nature of promoter's contribution. So let us read the answer together. How will the answer be drafted by the student? That is something important. The reason for getting low marks in this subject is not everybody, but some of you are not able to draft the answer of theoretical questions properly. You will just write down as per AS 12, grant should be credited to capital reserve. Your answer is right, but that is not a 5 marks answer. That is a 1 marks answer. Student has to first write like this. As per AS 12, then you should write the name of the standard after this. Where the government grant are of the promoter's contribution nature. Now, how do you know it is promoter's contribution? That is, they are given with reference to total investment in an undertaking or by way of contributing towards its total capital outlay. For example, central investment subsidy scheme, and no repayment is ordinarily expected. No repayment is expected means once given, usually, generally, they will not ask for refund unless something seriously goes wrong. The grant should be treated as capital reserve, which can neither be distributed as dividend or it cannot be even treated as deferred income. In the given case, subsidy received, you must mention this line. This subsidy is not related to any specific fixed asset, nor it is related to any revenue item. Therefore, it will be inappropriate to treat this grant as income in P&L account since they are not earned but represent an incentive provided by the government without related cost. If you write like this, institute is bound to give you full 4 or 5 marks. The correct treatment is to credit the subsidy to capital reserve. Therefore, the appropriate accounting treatment, therefore the accounting treatment followed by company is not proper. This was the answer of this question number 4, which is an exam question. Now I am going to dictate one question. Please note down this question. Write down. Write down one small question, similar question. In fact, if you wish, you can copy the answer from the previous question. Student will start writing now the question first. Samrat Limited. Samrat Limited has set up a business. Samrat Limited has set up a business. Please write the question. Samrat Limited has set up a business in a designated backward area, in a designated backward area, which entitles the company, which entitles the company for a subsidy of, for a subsidy of 25%, 25% of the total investment from the government of India. From the government of India, GOI you can write. The company has invested, company has invested rupees 80 crore in eligible investment. Company has invested rupees 80 crore in eligible investment. The company is eligible for the subsidy. Company is eligible for the subsidy company is eligible for the subsidy and has received rupees 20 crore and has received rupees 20 crore from the government in February 2019, from the government in February 2019. Now write down the company wants to recognize the said subsidy. The company wants to recognize the said subsidy as its income, as its income to improve the bottom line of the company, to improve the bottom line of the company. To improve the bottom line of the company. What is bottom line of the company? Bottom line means P&L account, profit, because the profit after tax comes in the last line of the P&L account. So that businessmen call it bottom line. Do you approve? Do you approve the action of the company? Do you approve the action of the company? Do you approve the action of the company in accordance with the accounting standard? And the source of this question is November 2019 RTB. Source is November 2019 RTB. And the answer you will write as homework. Answer you will write as homework same as question number 4. Same as question number 4. Again it was repeated. This is one of the highly repeated questions in your exam. So write down homework. Same as question number 4. You will write the correct treatment is grant should be credited to capital reserve. Grant should not be credited to P&L account. It is neither grant related to specific fixed asset nor related to revenue. It is a capital grant. It should be credited to capital reserve so that it can't be distributed as dividend. Same to same answer they have written in this exam also. So please come back to your theory part. Please come back to your theory part again. Now next paragraph is paragraph number 9. Government grant in the nature of non-monetary asset. Non-monetary asset means government can give you land, plant, okay, or equipment or computer. Government can even give you grants like license, okay, and mining rights, mining rights, or government can give you broadcasting right, radio broadcasting rights, television telecasting rights, etc. These are called these are examples of non-monetary asset which the government can give you as grant. Now there are two possibilities. First possibility is free of cost, zero cost. Government says you can take this land and you can construct a sports academy, educational academy, or any other activity. Or government can charge you a concessional rate. Concessional rate means market value is market value is 10 crore of this land, government will give you for 1 crore only. Wow, 1 crore pay and you get land worth 10 crore, right? So that is called concessional rate. The question is, what is the accounting treatment you will do? First example is concessional rate. That means at a highly discounted price. So if the market value of something is 10 crore, they may give you for 2 crore, 1 crore, 5 crore. So what the standard says, just pass entry based on their acquisition cost. So I will pass the entry, land account debit 1 crore, if I have paid 1 crore, to bank account 1 crore. Even though the market value was 10 crore, but I paid 1 crore, I got it as a government grant. So pass entry based on actual amount paid, if you have to pay anything. But suppose you got it free, oh my god, then you will record it at any nominal value. So for example, land account debit 1 rupee to P&L account 1 rupee. You can take 1 rupee, 10 rupee, 100 rupees, something just to bring the asset in the books. So this will help us to bring the assets in the books of account. Some example is also printed there. There is an example in your book below paragraph number 9. An asset with rupees 5 lakh fair value, market value is 5 lakh, is supplied by the government at concessional rate of rupees 2 lakh. At concessional rate of rupees 2 lakh. And second is given free. Now the 4-mark question for you is account for it. 4 marks for such easy question. So your answer will be case number 1. Case 1, you paid 2 lakh rupees for an asset whose fair value is 5 lakh. Entry. Now they have not mentioned what is that asset. So that asset can be PPE, then write PPE. That asset can be an intangible asset also, like license, software, brand, intangible asset debit. It can be some inventory item also. Whatever is that asset, debit at actual amount paid to bank account 2 lakh being asset recognized. And if it is a depreciable asset, then you will provide depreciation on 2 lakh in future years. Case number 2, free of cost. If it is free of cost, respective asset account debit, you will write some nominal amount, token amount, just to bring the asset in the book. 100 rupees, you can write 1 rupee, 5 rupees, 10 rupees, 20 rupees to P&L account. Credit is not important because the amount is not a material amount. Debit is given so that you will be able to see that asset in the balance sheet and you will know that this asset exists in the balance sheet. So this was my paragraph number 9. Paragraph number 10, government grant that are receivable as a compensation for expenses or losses incurred in a previous accounting period or for the purpose of immediate financial support to the enterprise with no further related cost. Okay. So either expenditure has been incurred in past or the grant is given for immediate financial support. So some companies may be in a very bad situation. Some industry may be in a very bad situation. Let's say after the lockdown which has happened, some companies have a very bad time, like hotel industry. So government will give some grant to them for immediate financial support. Okay. Or sometime you have fulfilled the condition in the previous year, but grant was received in this year. Government says you provide vaccination to 1 crore people. A hospital provided vaccination in year 21-22, but grant came in year 2023-24. So whichever year the grant will be received now, for the expenditure already incurred in the past, the treatment is you are going to transfer it to P&L account in the period in which they become receivable. So it will be simply transferred to P&L account once there is a reasonable assurance that they will be received, and it will be presented as an extraordinary item if appropriate. So it may be presented as a extraordinary item depending upon the situation if appropriate. So such grant will be treated as extraordinary item in P&L account if appropriate. In the same point number 10, it says, sorry, paragraph 11 now. This chapter has two parts. Part 1, receive grant, and part 2, which is a very painful thing, you have to refund the grant. Oh my God, refunding is a very painful thing, yes or no? Suppose you find 100 rupees in your bank account tomorrow morning, and then in the evening somebody comes and says, oh, by mistake I have put in your bank account, kindly refund me. How sad you will feel. How sad. Okay, when you receive, you smile. When you have to refund, you will cry. You will cry. So this is what we are going to do now. Accounting treatment of refund of government grant. So one simple thing I will tell you, in most of these refund examples, reverse the original entry. But be careful. Be careful because you have to see the balance sometimes. So the simple strategy would be, what entry you pass at the time of receipt, reverse entry will be passed at the time of refund, but be little careful. Be little careful because the amounts can be different. Okay, balance in deferred income account can be different. So therefore, with slight carefulness, we can handle the refund entries. Okay. Now the standard says, if you have to refund the grant, if you have to refund the grant, and if you have to show it in P&L account, oh my God, this is not an ordinary item. Refund of grant is not an ordinary item. You have to compulsorily present it in extraordinary item. So refund of the grant will be presented, if presented in P&L account. If it is not presented, the matter closes. But suppose you are preparing P&L account and there is a refund entry in P&L account, it will be presented under the line item extraordinary item. Okay. So what is the treatment of government grant? It depends on what was your original entry. So first we will discuss is amount refundable, paragraph number 12 in your notes. I have tried to make a good summary. The amount refundable in respect of a grant related to revenue. Related to revenue means not related to any fixed asset and not in the nature of promoter's contribution. Then what I will do, I will first apply it against any unamortized deferred credit remaining in respect of the grant. If there is any balance left in deferred income account, that I am going to debit first. But if that is not enough, then I am going to credit or charge the P&L account. So the entry you will not note down here for paragraph 12 first part, is first you debit deferred income, because that account you had credited when you had received the grant. So now you debit it. If the balance is not enough, then debit P&L account and to bank. This is what they are trying to say. First use deferred income to the extent you have balance in that account. If that is not enough, then debit P&L account and to bank. This way, the entry for refund will be passed if it is related to revenue. Next is grant. In the next point number 12, second line, if the grant is related to specific fixed asset and the refund is now to be made, now you have to remember what we have done originally. Originally, I had told you there are two options. There are two options. One is you credit the deferred income. The second was you credit the asset account. And if it is related to a non-depreciable asset like land, you also had a possibility of crediting the capital reserve. So originally, which accounts we have credited? We might have credited capital reserve. We might have credited deferred income. In case of depreciable asset, we might have credited the plant and machinery PPE account. Check which account you have credited earlier. At the time of refund, you have to debit those account. At the time of refund, you have to debit those account. So if you have credited capital reserve earlier, capital reserve account debit to bank. And if this balance is not sufficient, then P&L account debit balancing figure. If you have credited deferred income, you can credit deferred income in case of depreciable asset, deferred income to bank. If that balance is not enough, then you debit P&L account. If you had credited PPE account, so now the entry will be PPE account debit to bank. In case of this entry, the PPE balance will go up. Depreciation charge will increase in future. Depreciation charge will increase in future. Is it right? So this is the summary of what you will do if it is related to specific fixed asset. Check the credit and accordingly give the debit. So now I will read that paragraph from your book. The amount refundable in respect of grant related to specific fixed asset should be recorded by increasing the book value of the asset, that is this option, or by reducing the capital reserve, that is this option, or deferred income, that is this option, as appropriate by the amount refundable. So according to what you have done originally, you will pass the reverse entry. However, if you have debited the book value of the asset on reversal, depreciation charge will be also provided on revised balance prospectively over the remaining useful life. Again, this is a highly tested question in the exam. They will first give you an asset where you will provide depreciation for 2-3 years. Again, they will ask you for refund. Again, they have to provide depreciation on revised balance. Okay. And in all these cases, if suppose you have credited deferred income or credited capital reserve, at the time of refund, if balance in capital reserve or deferred income is less, then you will debit P&L account and present it in extraordinary item. So I have made a quick summary of both receipt and refund. So you will be happy to note that below paragraph 14, there is a quick summary for accounting of government grant, below para 14, nature of grant, accounting entry when grant is recognized, and accounting entry when grant is refunded. Okay. So when the grant will be received, debit bank account or debit grant receivable account. Receivable account you will debit if the company is reasonably sure that grant will be received and the company will comply with the conditions. Okay. Now here we have written various possibility. Grant related to a depreciable fixed asset. We have two options. Option 1, credit to fixed asset account, charge depreciation on reduced value, and in case if you have to refund, then the entry will be debit the fixed asset account, depreciation will be provided on revised value prospectively. Option 2 is credit the government grant or deferred income. You can say deferred income, and then you will write it off in the P&L account over the life of the asset in the ratio of depreciation. And if you have to refund, first you debit the deferred income, then you debit P&L account balancing figure, and credit will be to bank or to payable account. Okay, so this is the entry for grant related to depreciable fixed asset. Now point number 2, related to non-depreciable fixed asset. One option is this, you can just delete here. If you have credited to capital reserve, option 1, bank to capital reserve, at the time of refund, capital reserve debit to the available balance. If that is not enough, P&L account debit and to bank or to payable. I have written the credit entry in the heading only. And if suppose you have to incur certain cost to fulfill the condition, earlier we had deferred it. So option numbers, this is bank to deferred income. When you refund it, deferred income account debit, P&L account debit, balancing figure, and to bank, to payable. Institute have asked both type of question. A simple question where you just have to do the calculation, but they have also asked you to pass entries or prepare ledger. So that also we are going to practice. Third one, grant in the nature of promoter's contribution, credit to capital reserve account, but when you have to refund it, debit the capital reserve and balancing figure if any, P&L account, and you are going to credit bank or payable if payable after the balance sheet date. Grant in the nature of revenue. Okay, so if the conditions have been fulfilled, credit to P&L account, and when you have to refund it, debit the P&L account. If you have credited deferred income account, when you received the grant, bank to deferred income, transfer to P&L account over the period over which related costs are incurred, and then we will amortize it. If you have to refund this grant, first you debit deferred income. If that is not enough, debit P&L account. Point number 5. If grant is given for any past period cost or with no corresponding cost to be incurred, right? So here we will credit directly the full amount to P&L account and present it is as extraordinary item. But when such grant will have to be refunded, I will debit P&L account and I will present it under extraordinary item. Grant received in kind, like directly land received. It was at concessional rate. It was at concessional rate. The entry will be account at the actual cost incurred, that is at concessional rate, debit the asset and credit the bank. So land account debit to bank if it is land at actual amount, at actual amount. Now the this accounting standard is silent as to what treatment should be given. Interesting point. What is the interesting point here? This standard is silent as to what should be done when non-monetary grants have to be refunded. So you may have to refund that land back to the government. Two things can be possible. The cost of the land was, market value was 10 crore. Actual amount paid is 2 crore. Now government may either ask you to return that land or the government may ask you to pay the differential amount. Government will say we will ask you to pay the differential amount, we don't want to give you concession, please give 8 crore rupees more, or please return the asset only. So in case of default to comply with the terms and condition of the government grant, following possibilities are there. One possibility is government will take over the asset. Government will take that asset back from you. What you will do? You will write off the book value to P&L account. If government says, please return our land, government may not give you any money also. So the entry will be P&L account debit to asset account. Suppose government gives you some money, then bank account debit, P&L account balancing figure to asset account, that you can note down. Non-monetary grant refunded, asset itself is refunded. If you receive any money from the government, bank account debit, balancing figure P&L account debit to asset account. Sometimes the government may ask you to pay the differential amount. Okay. In that case, what you will do? If the concession amount is required to be paid, then the entry will be asset to bank. Whatever amount of concession you had given, government is withdrawing the concession. Pay the remaining 8 crore rupees. Pay the remaining 8 crore rupees. Then in that case, we have no choice but to pay 8 crore rupees and the entry will be asset account debit to bank account. So these two entries are not specifically given in the accounting standard 12, but this is for understanding that sometime non-monetary asset may also have to be returned back to the government, or the government may decide to withdraw the concession and ask you to pay the balance amount. So these are the entries at the time of refund. Okay. So now we'll solve question number 3. All of you please come to question number 3, which is printed in your book after 2 or 3 pages. Question number 3, this is the question, you will find it in your book. RST Limited has set up a plant at a cost of rupees 360 lakhs. Underline, cost of the plant is 360 lakhs with an expected life of 9 years. Cost 360 lakh, life 9 years. The company received a grant from the state government The company received a grant from the state government of rupees 80 lakh, which was to be utilized after fulfilling certain condition. Grant is 80 lakh. The company treated this grant as a deferred income. So what is the treatment this company has given? Bank account debit 80 lakh to deferred income 80 lakh. Bank account debit 80 lakh to deferred income 80 lakh. And then what they are going to do? They are going to amortize it over the life of the asset in the ratio of depreciation. The company could not fulfill the condition. Oh my God, company could not fulfill the condition. So what will happen now? Refund. Company will have to refund the grant, and the grant was to be refunded. At the time of refund, the balance in the deferred income was 72 lakh, which means 8 lakh they have already recognized in P&L account. Balance in deferred income account is 72 lakh, but the grant they have to refund is 80 lakh. So out of 80 lakh, you have still a balance of 72 lakh in deferred income. So you will debit that. P&L account you will debit 8 lakh, and to bank 80 lakh. This will be the treatment for refund of this grant. First, utilize deferred income to the extent available balance. The question itself says the balance available is 72 lakh. Refund is 80 lakh. So remaining amount will be transferred to P&L account, and it will be presented as an extraordinary item, right? Now what it says, and the balance in the plant account was 280 lakh. Balance in the plant account is 280 lakh. 360 is the cost. 280 is the balance. So that means remaining amount represents, remaining 80 lakh represents depreciation provided. And what is the life of the asset? Life of the asset is 9 years. So 360 divided by 9, annual depreciation is 40 lakh. Per annum depreciation is 40 lakh. Total depreciation provided is 80 lakh. My question is, after how many years the grant was refunded? All of you will participate. After how many years the grant was refunded? Guess. After how many years the grant was refunded? Total depreciation provided is 80 lakh. Depreciation per annum is 40 lakh, which means 80 divided by 40, 2 years. 2 years are over, and then the grant had to be refunded. Is it right? So all of you will agree this grant was refunded after 2 years. And the journal entry I have told you, deferred income account debit 72, P&L account debit 8 to bank account 80. Tanya, Pawar, Jain, you are right. So this is the explanation for this part. So first question is based on this much data. What should be the treatment of the grant? What should be the treatment of the refund of the grant? Entry I have told you. You can read your book also. Deferred income account debit 72, P&L account debit 8 to bank account 80. Then suddenly they change the question. This is a change in the question. In case, now this is my first option where we can credit the grant to deferred income account. Now they are changing the question and they are asking you, suppose the company had deducted the grant from the cost of the plant. Two changes they are making in the problem. Change number one, assume that grant was deducted from the cost of the plant, and also assume this is a new adjustment. Also assume residual value of 10 lakh was expected after 9 years. Original question does not have residual value. Original question does not have residual value, but in this revised question also assume there is a residual value of 10 lakh. Then what would be the treatment of the refund of the grant? So in this case, since I have credited the asset account, when you will refund the grant, the entry will be plant account debit to bank, 80 lakh, 80 lakh. This will increase the carrying amount and this will increase the depreciation charge for the future year. Is it right? So what the institute can ask you, you can just add there, prepare plant account. Please add in your question book, prepare plant account for 3 years. Prepare plant account for 3 years. They can give you what is the balance in plant account at the end of year 3. So either you can get it mathematically or you can prepare a ledger account. Is it right? So now one by one, first answer I have explained. I am going to explain case 2. In case 2, grant was credited to fixed asset account. Grant was credited to fixed asset account. So how that fixed asset account, that is plant account, would look like? So please listen to me, because such questions are being asked in the exam. So I am going to prepare a ledger for 3 years. Year, particulars, rupees in lakhs. Year, particulars, rupees in lakhs. In year 1, the company purchased the plant to bank account 360 lakh. Purchase. And in year 1 they received the grant also. Bank to plant account. So credit side by bank 80, in bracket right here, grant received. In bracket right, grant received, and then they will provide depreciation by depreciation. How much depreciation? Understand, the cost of the asset was 360 minus grant 80. So this is my reduced carrying amount, minus residual value 10 lakh, minus residual value 10 lakh, because this is straight line method. You have to deduct the residual value and divide by 9 years. So this calculation will give you 30 lakh. Check. Is it 30 lakh? 30 lakh, and by balance carried down will be 250 lakh. So this is going to be my first year of accounting. First year would look like this, simple. Year 2, balance brought down 250, and in year 2 no problem, by depreciation same figure, because we are following straight line method. In year 2 nothing happened, so by depreciation 30 lakh, and by balance carried down will be 220 lakh, total 250 lakh. Year 3 you have to refund the grant at the beginning. So the entry will be, we will assume refund was at the beginning. We will assume refund was at the beginning. Okay. So to bank 80, write in bracket here refund of grant. Please write, those who have the book in front of you, to bank in bracket refund of grant 80. So this will increase the carrying amount now. Now the institute usually asks you the question, how much will be depreciation in the year 3? So year 3 depreciation will be revised now because your carrying amount of plant has changed. Carrying amount of plant has become 220 plus 80 minus residual value 10 minus residual value 10 divide by remaining number of years. 9 year was the original estimate. Year 1, year 2 are over. So number of years remaining are 9 minus 2, that is 7. So please give me the answer now. What will be the depreciation? 41.43. 41.43. Sanket is right. And by balance carried down. By balance carried down. So tell me the balance now. 258.57. 258.57 will be the balance carried down. Very important question. Write down very important question. And I'm going to take some recent problems also. You will realize that these are important questions. This question requires the knowledge of two chapters, AS10 also and AS12. Some knowledge of AS10 is also required here. Now there is one query, why we have not considered residual value in the original question. In the original question, residual value was not there. This residual value they have added as a separate adjustment in the second question. Therefore, it is considered only in the second question, not in the first question. How did you know that this refund was made after 2 years? From the original question, we get to know that the refund was made after 2 years, and the same assumption we will apply in the second question also. Okay, so this answer is over. Still, if you have any query, please ask me now. Do not hesitate. Raise your query. Okay, no query. Let us move to one more question. I am going to dictate. Please write down. Please write down one question in the notebook. Question is like this. On 1420x1, please write, on 1420x1, ABC Limited, ABC Limited received grant of, ABC Limited received grant of rupees 300 lakh. ABC Limited received grant of rupees 300 lakh for acquisition of machinery, for acquisition of machinery costing rupees 1500 lakh. Costing rupees 1500 lakh. Then write down, the grant was credited to the cost of the asset. The grant was credited to the cost of the asset. Any query related to AS12 can be asked any time during the lecture. Grant was credited to the cost of the asset. The life of the machinery is 5 years. The life of the machinery is 5 years. The life of the machinery is 5 years. Next line, the machinery is depreciated at the rate 20% on WDV basis. The machine is depreciated at the rate of 20% on WDV basis. The company had to refund the grant. The company had to refund the grant in May 2004 due to non-fulfillment of certain condition. Due to non-fulfillment of certain conditions. Company had to refund the grant in May 2004. So now you see this is 1/4/2001 and the refund is being made on May 2004 due to non-fulfillment of certain conditions. Question is, how would you deal with the refund of the grant? How would you deal with the refund of the grant? In the books of ABC Limited, assuming that the company did not charge any depreciation, assuming that the company did not charge any depreciation for the year 2004. So ignore the depreciation for 2004. So 1/4/2000 x1, x2 first year, x2 x3 second year, x3 x4 third year, which means the grant was refunded after 3 years. The grant was refunded after 3 years. Forget this May. Okay, because the question says company did not charge any depreciation and the source of this question is your study material of the institute. Similar questions we have done just now. The only difference is the previous question had SLM method of depreciation. This time it is WDV. Is it right? So the answer is, if you have credited the grant to the asset account, when you are going to refund the grant, you are going to debit the asset account. So the entry will be asset account debit to bank. And how much is your grant? The grant is 300 lakh. So you are going to add back 300 lakh in the cost of the asset. Okay, so let us write down the answer properly in the notebook. First write a small note. First write a note. This is how you will present the answer for getting full marks. As per AS 12, please write same question, only this time the method of depreciation is WDV and the refund was made after 3 years. As per AS 12, the amount refundable in respect of a grant related to specific fixed asset should be recorded by increasing the book value of the asset, or by reducing deferred income balance as appropriate by the amount refundable where the book value is increased depreciation on the revised book value should be provided should be provided prospectively should be provided prospectively over the residual useful life of the asset over the residual useful life of the asset over the residual useful life of the asset. So this is called principles of AS12 relating to refund of a grant related to specific fixed asset. Institute will be happy if you write such notes. Now write down a table, heading write down calculation of revised book value. Calculation of revised book value after refund of grant. Calculation of revised book value after refund of grant. So what I will do, first I will start with the date when the asset was purchased. Since the question does not require you to prepare a ledger, the student can either prepare a statement or can prepare a ledger. Both are okay. So write down 1st April 20x1. 1st April 20x1 you write acquisition cost of machinery. Look at your question. 1500 minus 300. 1500 is the cost and 300 is the grant. If you are preparing a ledger, 1500 write on the debit side and 300 write on the credit side. So that means on day 1, the carrying amount will be 1200. Question says the grant was credited to the asset account. Then on 31st March, we are going to provide depreciation on 1200, not 1500. And the question has given you the rate and method both. So I don't have a choice. So I will calculate depreciation as per the rate given in the question at 20%, 240. So this will give me book value on 31st March 2000 x2, 960. One more year depreciate. Less depreciation, 31st March 2003, 20%. But because we are following WDV method, the depreciation will reduce every year. So this time it will be 192. Balance, once again, the book value on 31st March X3 would be 768. Continue. 31st March 20X4, less depreciation at 20%. Please follow WDV method. 20% of 768 is 153.60. Now we'll come to the year in which the refund was made. 1st April 20X4, 1st April 20X4 book value is 614.40. The question says do not provide depreciation for 1 or 2 months. Just ignore the depreciation for 1 or 2 months, and now you are refunding the grant. The entry will be asset account debit to bank. So asset value, add refund of grant. Assuming same amount you have to refund, 300. So therefore revised book value will be 914.40. Will be 914.40. Okay. Now you write down again one note. Now the depreciation will be provided on this amount 914.40, okay, over the remaining useful life. So you will write a note depreciation at the rate 20%, depreciation at the rate 20% on revised book value amounting to rupees 914.40 lakh, amounting to rupees 914.40 lakh is to be provided prospectively, is to be provided prospectively over the residual, over the residual useful life of the asset, over the residual useful life of the asset. One more note, write down. Note, the company may also revise the rate of depreciation. The company may also revise the rate of depreciation because they are following WDV method. When you are following WDV method and when you change the carrying amount, you also need to revise the rate of depreciation so that the asset will get depreciated over the remaining useful life. Okay, but the institute have not revised the rate. Ideally, when you are following WDV method, the rate will get revised every time the carrying amount or residual value or useful life undergoes a change. Okay, but the institute has kept the life simple for you. So you will just simply say that depreciation will be revised but prospectively over the remaining useful life, and the entity can even revise the rate of depreciation. So this answer is over. Today as a homework, solve all questions again. Then this chapter will become permanently embedded into your mind, and whatever question they will ask you, you will be able to solve. We'll do one more practice for you. Write down one more question. More practice today is better. Do not practice in the exam. Exam is not your practice ground. That is very expensive practice. So practice now, enjoy later. Please write one more question. The source is your study material. Similar questions have been asked in the exam. Question is, a fixed asset is purchased, a fixed asset is purchased for rupees 20 lakh. A fixed asset is purchased for rupees 20 lakh. Then write, government grant received, government grant received towards it. The government grant received towards it is rupees 8 lakh. The government grant received towards it is rupees 8 lakhs. Residual value is rupees 4 lakh. Residual value is rupees 4 lakh. And useful life is 4 years. And useful life is 4 years. Assume depreciation on the basis of SLM. Assume depreciation on the basis of SLM. Asset is shown in balance sheet net of grant. Asset is shown in balance sheet net of grant. Asset is shown in balance sheet net of grant. After 1 year, the grant becomes refundable. After 1 year, the grant becomes refundable to the extent of rupees 5 lakh. The grant becomes refundable but not full, only 5 lakh, to the extent of rupees 5 lakh due to non-compliance with certain conditions. Due to non-compliance with certain conditions. Now this time they have asked you the query, past journal entries for first 2 years. Past journal entries for first 2 years. So this time the student will have to pass journal entries for 2 years only. What is the treatment this company has done? This company has credited the grant to asset account. Company has credited the grant to asset account. So when the grant will become refundable, you need to debit the asset account. You need to debit the asset account. Is it right? Debit asset account and credit bank account when the grant becomes refundable. This will increase the carrying amount of asset, and this will increase the depreciation charge also. But good thing is that in this question, the depreciation is SLM. So write down the answer now. Very easy question. To get good marks, we are going to first calculate working note 1, depreciation for year 1. Depreciation for year 1. Depreciation for year 1. So my original calculation of depreciation would be, I will take the cost of the asset 20 lakh. Cost of the asset I will take 20 lakh less government grant received, less government grant received 8 lakh. First two line of the question. Fixed asset is 20 lakh, grant received 8 lakh. So therefore, the carrying amount is 12 lakh. Therefore, carrying amount is 12 lakh. Depreciation will be 12 lakh minus residual value 4 lakh, which is given in your question, 4 lakh residual value, and divide by useful life 4 years. 12 minus 4 divided by 4. The depreciation in the year 1 will be how much? Come on. Depreciation in year 1 will be how much? Come on. As per AS 12, what is the answer? 2. Depreciation will be 2. So first year they will charge 2. What will happen in the second year? They will have to refund the grant. When they will refund the grant, the carrying amount will go up and the depreciation charge will also have to be revised. Okay. Now, I am going to ask you a question. Will you please participate in the answer? Please try and tell me what will be the depreciation for year 2. Please practice now. Do not make examination practice ground. Exam has to be passed in one attempt. Today you try. Question for all the brilliant students is, how much depreciation this company will provide in the second year? How much depreciation this company will provide in the year 2? Year 2. Come on, come on, come on. How much depreciation this company will provide in year 2? In year 2, you have to first give the effect of refund and then calculate the depreciation over the remaining years. So let us write down the answer. First write down cost of the asset was 20, less grant 8, balance 12. Cost of the asset 20, less grant 8, balance 12, and first year depreciation 2, which means the balance, opening balance in year 2, opening balance in year 2 is 10 lakh. Can you agree with that? Opening balance is 10 lakh, but then the grant becomes refundable. Grant becomes refundable, so add government grant refundable, which is 5 lakh. So they have to refund only 5 lakh, not 8 lakh. So this is a different question. In all previous problem, whatever grant was received, fully it was refunded. But this time the question specifically mentions that only 5 lakh will be refunded. So my carrying amount will become 15 lakh now. My carrying amount becomes 15 lakh. Write down carrying amount 15 lakh, and now depreciation for second year will be, so some student have got 3.67 lakh, some got 2 lakh, some got 5 lakh. Oh my god. So the formula still remains the same. You will take this revised carrying amount minus residual value over remaining useful life. Remaining useful life is 3 year now. 4 minus 1. So that is why the answer is 3.67. Only one student gave the correct answer. So this is why practice is required. So possibly some student have not considered this 4 lakh, right? And some student have got the answer 2 lakh rupees again. I don't know how you got 2 lakh in spite of the refund. Okay, Surya is 3.67 lakh, Sanket Jain is 3.67 lakh. Others are not correct. So anyway, this is the answer. Now the question says pass journal entry for 2 years. Once these two working notes are ready, we can easily pass journal entry. Take out your notebook, write down books of ABC Limited journal entries, or books of, name of the company is not given, books of dash dash journal entries. Come on, everybody, draw the format. Very important question. Very, very important question. First entry will be in year 1. Year 1 beginning, we are going to buy a fixed asset for 20 lakh. Entry will be fixed asset account debit to bank 20 lakh. Fixed asset account to bank 2020. Do you enjoy 2020? Okay. Being fixed asset purchased quickly. Now you receive the grant also in year 1. So the entry will be bank account debit 8 to fixed asset account 8, being grant received from the government. Being grant received from the government. Reduce the cost of fixed asset. Being grant received from the government. Reduce the cost of the fixed asset. Come on, everybody. This is the entry on day 1 when the asset was purchased and the grant was received. Draw one line here. Next, you will provide depreciation. Working note 1. In year 1, the depreciation amount was 2 lakh. Already calculated in working note 1. Depreciation account debit 2 lakh to fixed asset 2 lakh. Being depreciation charged. Being depreciation charged on SLM. Being depreciation charged on SLM. And this depreciation 2 lakh we are going to transfer to P&L account. P&L account debit to P&L account debit to depreciation account to depreciation to being depreciation transferred to P&L account. Being depreciation transferred to P&L account. Now you draw one line fully. This completes year 1. Draw one line fully, one line blank. Now write down year 2. We are changing the year. First we'll have to refund the grant. So the entry for refund will be, since we have credited the fixed asset, the debit will be given to fixed asset account debit 5 to bank account 5. Fixed asset account debit 5 to bank account 5 being government grant on asset partly refunded. Being government grant on asset partly refunded, which increase the cost of fixed asset. Which increased the cost of fixed asset. Which increase the cost of fixed asset. And then we'll provide depreciation. Depreciation will be revised. Refer working note 2 in your notebook. How much was the revised depreciation? The revised depreciation figure was 3.67 lakh. So the entry now would be depreciation account debit 3.67 lakh to fixed asset account 3.67 lakh. Being depreciation charged on straight line method, on revised value of fixed asset, prospectively, on revised value of fixed assets prospectively. On revised value of fixed asset prospectively. And the last entry for this question, P&L account debit to depreciation account 3.67. P&L account debit to depreciation account 3.67. Narration is homework for this last entry. Same narration copy from previous year. So this answer is over. Any query on this question? Mark it important question. For exam purpose, important query. It has grant received, it has grant refunded, it has depreciation adjustment. So a potential question for 4 to 5 marks. Now you come to your booklet. In your booklet there is a question number 5 already printed in the book. Question number 5. Anybody any query on this chapter till now related to AS12? Only query related to AS12. So question number 5 says X Limited received a revenue grant. So now I'm going to take again a different problem. This is a revenue grant, 10 crore during 6-7 from the government for welfare activities to be carried out by the company for its employees. The grant prescribed certain conditions for utilization. However, during the year 8-9, 2006-7, 7-8, so 2 years are over. During the year 8-9, it was found that the prescribed conditions were not fulfilled and the grant should be refunded to the government. State how this matter will have to be dealt with in the financial statement for the year 2008-9. Now this question has not given us what is the balance in, this question has not given us what is the balance in deferred income account. So we just have to write a theoretical answer for this. That company will debit the balance in deferred income account first. If that is not sufficient, then the company will debit P&L account and it will be shown as an extraordinary item in profit and loss account. So just read the theory part, because the question does not give you enough information to do any kind of calculations. So what they are expecting from the student is that you must just write down the main principles of this standard for this answer. So the principle of AS12 you have to write. So how will you present the answer? You will present the answer in detail like this. So this is a model answer how you should attempt a theory question. So you will write, as per AS12, a grant that becomes refundable should be treated as an extraordinary item as per accounting standard 5. Amount refundable in respect of government grant which is related to revenue. Previous 3 or 4 questions were based on fixed asset. Now I purposefully took one question of a different type. Revenue will be first applied against unamortized deferred credit remaining in respect of the grant. So first you are going to debit deferred income account if there is any balance. Then if the amount to be refunded is more, then the balance will be charged to P&L account as balancing figure. Therefore, the refund of grant of 10 crore should be shown in the profit and loss account of the company as an extraordinary item during the financial year 2008-9. So the student can write this entry also below. Student can write this entry also below. Deferred income account debit, P&L account debit to bank account. This question has not given us clearly what was the balance in deferred income account. So this is the answer. Important theory question for 2 to 5 marks. Okay, one more question I am going to dictate. So this question is being asked in April 2021 MTP for 5 marks. Oh my God. April 2021 MTP for 5 marks. Please come to this question. I am going to dictate. It's a small question, don't worry. Come on, everybody, write down question in your notebook. R Limited. R Limited purchased machinery for rupees 80 lakh. R Limited purchased machinery for rupees 80 lakh. Useful life 4 years. Useful life 4 years. And residual value rupees 8 lakh. And residual value rupees 8 lakh. And residual value rupees 8 lakh. Then write down government grant received is rupees 32 lakhs. Government grant received is rupees 32 lakh. Question is easy. 5 mark question, very easy. Show the journal entry to be passed. Show the journal entry to be passed at the time of refund of grant. Show the journal entry to be passed at the time of refund of grant and the value of the fixed asset in the third year. And the value of the fixed asset in the third year. And the amount of depreciation for the remaining 2 years, amount of depreciation for the remaining 2 years if the grant is credited to deferred grant account. If the grant is credited to deferred grant account. if the grant is credited to deferred grant account. So this is the question. 5 mark question. Let us read again. X Limited purchased the machinery for 80 lakh. Useful life 4 year. Residual value 8 lakh. Grant received was 32 lakh. But what was the treatment of the grant? The treatment of the grant is that this time they have credited the grant to deferred grant account. They have credited the grant to deferred grant account. Okay. The question is you have to pass the journal entry at the time of refund of grant. Don't pass entry for all 3 years. Only entry for refund. And then value of the fixed asset in the third year. What will be the value of the asset at the end of third year? And then the amount of depreciation for remaining 2 years. Amount of depreciation you are going to charge. In this question, since we are going to credit the deferred credit, asset account is not affected. So depreciation will also not be affected. So depreciation will remain 80 lakh minus 8 lakh divided by 4 years. So how much is the depreciation? Depreciation is 18 lakh per annum and it will continue. And it will continue. The grant is 32 lakh. 32 by 4. 8 lakhs you are going to transfer to P&L account every year. So after 2 years, you would have transferred 16 lakh. In 2 years, you have transferred total 16 lakh to P&L account. So balance in grant account after 2 years will be 32 minus 16 lakh. Now what happened? You have to refund the grant. So when you have to refund the grant, first you will see how much balance in deferred income account. Deferred income account you have 16 lakh. But you have to refund 32 lakh. So remaining 16 lakh you have to debit P&L account and to bank 32 lakh. So this is the entry for refund of grant. The balance in the asset account after 3 years will be, the value of the asset is 18 lakh. You are providing depreciation at the rate of 18 lakh per annum. So 80 lakh minus 18 lakh per annum into 3 years if I take at the end, this will be the answer. And the depreciation charge will remain the same because we have not credited the asset account when the grant was received. So this is another type of question. Grant relates to specific fixed asset, but the entity had credited the grant to deferred income account. So asset account is not disturbed. Asset account will continue as it is. So do you want to write the answer? Do you want to write the answer? If the answer is yes, then we will start writing. So please write down in the books of R Limited. I have explained it. Now let us present it. In the books of R Limited. In the books of R Limited. This time the grant was credited to deferred income account. So you will write if the grant is credited to deferred grant account, if the grant is credited to deferred grant account, if the grant is credited to deferred grant account, then first you write down one paragraph for your future reference and future memory. Later on you may forget. As per AS 12, income from deferred grant account income from deferred grant account is allocated to profit and loss account is allocated to profit and loss account usually over the period usually over the period and in the proportion in which in which depreciation on related asset is charged in which depreciation on related asset is charged in which depreciation on related asset is charged. So that is what is called principles of AS12. Now write down amount credited to P&L account in the first 2 years. Amount credited to P&L account in the first 2 years is 32 lakh divided by 4 years into 2. So that is 8 lakh into 2. That is 8 lakh into 2. Calculate. 16 lakh rupees already credited to P&L account. 16 lakh rupees already credited to P&L account. So now you tell me what is the balance of deferred grant account after 2 years? What is the balance in deferred grant account after 2 years? So you will say 32 minus 16 and that is equal to rupees 16 lakh. That is 16 lakh. This is the balance in deferred income account. After 2 years, this company had to refund the grant. So now what they will do? First they will try to utilize or debit deferred income account. If that is not sufficient, then they will debit the P&L account. So write down next line, entry to be passed on refund of grant. This was your first question. Entry to be passed at the time of refund of grant. Entry to be passed on refund of grant. So I will first debit deferred grant account. Balance is 16 lakh. Calculation done. P&L account debit 16 lakh and to bank 32 lakh. So this P&L account is like balancing figure. Narration write down, being government grant refunded. Being government grant refunded. Any query here? Any query on this? Now write down value of fixed asset after 2 years but before the refund of grant. Value of fixed asset after 2 years but before the refund of grant. So now you write down fixed assets initially recorded in the books. So we are not going to credit the grant to fixed asset. So fixed asset will be recorded at rupees 80 lakh. Fixed asset recorded in the books rupees 80 lakh. Then write down depreciation per annum. Depreciation per annum will be SLM formula, cost minus residual value divided by number of years. Do not credit grant, do not deduct grant year. 80 minus 8 divided by 4. 80 minus 8 divided by 4, rupees 18 lakh per annum. Therefore, book value of the fixed asset, after 2 years, book value of the fixed assets after 2 years will be 80 lakh minus 18 lakh into 2 is 44 lakh. Okay. Next line. Value of the fixed asset after the refund of the grant. Value of the fixed asset after the refund of the grant, that will not be affected. That will not be affected because I'm not going to debit the refund to asset account. Already explained, because my original treatment was we had credited the grant to deferred income account. So now I am not going to adjust the refund in fixed asset account, so it will remain the same. So you will write a note on refund of the grant, on refund of the grant, the balance of deferred grant account, the balance of deferred grant account will become nil, will become nil. Balance in deferred grant account will become nil. The fixed asset will continue to be shown, the fixed asset will continued to be shown at rupees 44 lakh, at rupees 44 lakh. Now write down amount of depreciation for remaining 2 years. Will the depreciation charge change? Please reply. Will the depreciation charge change? The answer is no, because I have not adjusted grant in asset account. So my answer is depreciation will continue to be charged. Depreciation will continue to be charged at rupees 18 lakh. Depreciation will continue to be charged at rupees 18 lakh per annum for the remaining 2 years. For the remaining 2 years. So depreciation will remain 18 lakh per annum. Every year the balance will reduce by 18 lakh. That is the answer of this very important question. Okay. So mark it important. All questions I have dictated to you are important, and all which I have not dictated are also important. Okay. So now we'll just read the two more paragraphs pending. Come to the theory part. Come to the second page of this chapter. Come to the disclosure paragraph. Disclosure paragraph number 14. Paragraph number 14. Last paragraph. 2 lines more. Every standard will end with a disclosure paragraph. So as per AS 12, you have to give following disclosures related to grant. What is the disclosure requirement number 1? First, you have to disclose underline accounting policy adopted for government grant. So whatever policy you have followed, like you will say grant related to specific fixed asset is credited to asset account, or you can say grant related to specific fixed asset is credited to deferred income account. So whatever is your policy, please disclose here, including the method of presentation in the financial statement, whether you are presenting gross or net, that you need to disclose, because there are two methods of presentation in P&L account is given to you. You can show income separately, expense separately, or you can show expense net of grant income in P&L account. Then you have to disclose the nature and extent of government grant. Nature and extent of government grant recognized in the financial statement. What kind of grant you have recognized and how much you have recognized, disclose. If suppose you have received a non-monetary asset as grant, like for example you have received land, plant, license as grant, give proper disclosure whether you have received at a concessional rate or you have received free of cost. So that you need to disclose. Okay, so this is about the disclosure part, and with this, this wonderful standard comes to an end. Thank you.